WeWork may be making headlines with its reported Chapter 11 filing to come, but bankruptcies have been slowly increasing for a while. The third quarter closed with the most bankruptcies so far in 2023, according to S&P Global Market Intelligence. September saw another 62 companies file for bankruptcy, bringing the third quarter's total to 182. Now, S&P Global Market Intelligence cites the Fed maintaining its interest rate policy, leaving the economy in a higher for longer environment, as adding to economic pressures. And healthcare saw the majority of companies leaving the industry, marking its second consecutive month as the sector with the most bankruptcies. It's interesting because a lot of the firms that also went bankrupt were zombie firms, these unprofitable companies that just stay afloat by taking on new debt, and that ends up having a domino effect. You have these banks that are investing, letting them have this debt and then hoping that they'll turn things around, and they're not. So it's interesting to see, though, healthcare, though, still as the consecutive one, really taking the biggest losses here.
Yeah, a bit of a shakedown happening. I mean, you could argue that, maybe that's not necessarily a bad thing when you talk about those unprofitable companies, but really it does come back down to those higher rates we've been talking about. Jared earlier was talking about the Treasury auction, the additional issuing of Treasury bonds. Government debt is becoming more expensive because of higher rates. It's no different for corporate debt as well. So, you think about some of those names that have already gone bankrupt this year. Bed Bath & Beyond, Yellow's another one, Smile Direct Club. I mean, these are all companies that were already struggling with high debt even before the Fed started this Fed hiking cycle. So not entirely surprising, but curious to see how much more of a shakedown happens as we maintain these rates for longer.